Hey, this is Diggy here from ForexHabits.com, and today we're having a look at the Euro US dollar, and we're going to analyze what direction it is going to go in, and we're going to see if we can find any profitable trading entry points. So let's have a look here. We're on the monthly chart here. As you can see, it goes all the way back to 1986, way before the euro was even conceived, which came about in about the year 2000, when it started about the 0.0 or 0.8 level, and it went all the way up to the 1.60, and now it's hovering at around 125. Now, from what I see on this monthly chart is that it's looking negative. Firstly, it's under this descending trend line, which runs all the way over the top, and you can draw one like this as well, where it just kind of went like that, and it's under that. Price action is currently under the three moving averages, the 100, the 21, and the 50. The RSI is under a strong descending trend line too. It's under the 50 level, which is negative. The stochastics are hovering down. They're still they're crossing a little bit here, but it's still negative. So just all these indicators is just making it look negative. What's also negative is here we have the 21 moving average, exponential moving average, crossing down through the 50, and that does not happen a lot. You can see here when it crossed up through it, it basically went up for the next 4, 5, 6 years. So if this is indeed a true cross to the downside, this Euro US dollar could end up going down, heading in a downwards direction for the next couple of years. But the cross is not so definitive yet, and as you can see, it's been hovering close, so don't know if that's a true cross for now, but it's looking like it wants to move down, this Euro US dollar down towards this level somewhere there. We can have a look on the weekly chart and the daily chart to get a better picture, but from what I'd say is that this Euro US dollar, even though it may rally a bit, it should not get much higher than about the 131 level, 130 level, somewhere around there, if it does go that high before heading down. And I actually expect this is a monthly chart, so I expect this to be a little month, maybe pull back down to 124.50, 124 by the end of the month, and the next month be a big down month. But let's change it to have a look at the weekly chart, how it's looking here, and if we can determine anything. These two trend lines stay the same, of course. It's also below all three moving averages on the weekly chart. It's under even more of a descending trend line right here. It's still under the 21 moving average. The RSI is still way below 50. The stochastics are low, so this is still looking negative very much. Even though we could get a rally once again up to maybe here, this horizontal point, 130, 131, somewhere there is possible. Let's get rid of these lines, and let's take a look at the daily chart. On the daily chart, we can see it's also still below all three averages, even though it crossed through the 21. It hovered a bit, but it was held back by the 50 moving average, exponential moving average on the daily, but it dropped back down, and it's still under the 21 moving average. It's a bit difficult to say if there will be an intermediate term higher bounce, because this is looking like a bear flag where you've got the pole and the flag, and then it should continue lower. But once again, we sit here, we're under this descending trend line, and even if it does manage to rally, once again it should be capped by about the 100 moving average on the daily, or this descending trend line once again, and horizontal here around the 130, 131 level, if it does manage to get there. But targets for the downside could be as low as 110, eventually the parity level, which it might try and go for in the next, no idea, maybe next 2 years as a thumbs up figure, but that's something that you have to keep watching as time progresses and as patterns give you more indications where it could lead to. For now, I wouldn't take a position right now unless it continues to drop, and then you could say, okay, we'd go short maybe at this level 125.50, but we'd put a stop just above 126.50. It's 100 pip, and it's a bit risky because it can go either way from here. What I'd ideally like to see is that it would make a rally up towards 129, 130, and then start a big short here for way downside. So for now, it's looking like Euro US dollar wants to head lower, especially with all the European crisis and the situation of Europe at the moment, with all those countries with bad debt and not knowing how it's going to be resolved, and if there could potentially be a breakup of the Eurozone. If any of that's going to happen, it's really going to send Euro US dollar down, down, down. People want to get out of the Euro and people want to get into the dollar. So for right now, it's something to watch. Downside, there is potential for a rally up to 130, 129, 130, 131 maybe. If that happens, not guaranteed that that will happen, because as I said, it's looking very fragile, this chart, and Europe is very fragile. So if some bad news comes out, this can end up going down from this level. So we'll have to see how the week progresses to get a better entry point, where it's really for good risk reward. We'll see how that develops, and I'll keep you posted on the blog. Remember to check out forexhabits.com and subscribe to the email updates to get all these latest trade analysis and recommendations. Cheers.